to it. Good morning, everybody. Here it is, 6:56 a.m. Today's date is wonderful. It is calendar 12/17. A Merry Christmas to everybody, and all of our prayers and thoughts go out to the families in Connecticut there. And I'm glad that the rest of the country took the time to look at what's happening in this world outside of the U.S. exchanges. Right now in pre-market, before the market opened up, Google's up went up to 714.82. It's pulled back 200 pennies live. They closed the $710 put at $12, and my bid was $4.80 in pre-market, and I drop it $4.20 and $3.20 for later calendar day in case you want to come back and break those highs. The reason why we're doing this live is because it was done before the fact, not after the fact. This is what a reversal looks like in the MMT. We are at 74. When this IR goes down, prices go down, they don't lag. The diamonds are going the opposite. These were ascending breakout diamonds, and these are pullbacks from that opening bell. We've been open for 28 minutes. That's all we've been open for. And we had exactly 21.91 teeny movement at 59 cents a teeny per line. And then we hit the highs, and we've come down 1 teeny, 2 teenies, 3 teenies, 4 teenies, 5 teenies to the penny right here. And he's got a double diamond up. So that's 5 teenies times 59 cent reversal. Because this still remains right around the 75 area, it means that the intraday high, 28-minute opening bell trade for the long side worked, and now we're hitting that short side of the tape. That means that when you make money on the pullback, and it's just making money on the pullback. Now, the options that I gave out to buy in pre-market were $4.80. We had to make an adjustment and buy some, and we're going to sell them out here now for a profit. Because we do have some Brian Plain, you know what to do. So, anyways, they're 570 by 610. You know, we come out with as much as we can get, and we will buy even lower on the intraday process. Just do what you need to do, or call me on my house phone. Here we are at 712.03, 712 by 57. This is live right now. They're 610. They were $8.95 on the high. The low was $4.90. The closing price was $12. There's a $4.05 range based on the intraday reversal high. The calls made their peak. The calls right here, the $700 calls in the money, they were $9.60. They went up to $16.50. That was a $6.90 gain. We had these calls for this call side, for this side of the market. But you have to know when to sell into the highs here, my new MMPs. If you don't, you get left in the bag. So when this value comes down, this put side goes up in value, and I had that limit order at 480. I was within 10 cents, and sometimes you have to make the adjustments. But then you're going to know where to come out at based on the fact that when you're losing value in the calls off of the high, it's only a couple bucks. But across the board, the call side of the market peaked. See? The 710 call, they were 460, 940. Right now they're 760 by 8. So they're coming down in value based on dollar price movement in the equity. Once again, you have a 72 IR. If this doesn't go below 65, you're going to hold support. This was the breakout channel. This has to go below 65. Otherwise, you don't go down in price. And these two diamonds right here on that 3-minute bar will be that resistance. And you have just now hit the 30-minute opening bell level with a positive 1 delta 04. And each line is 55 cents. So, on the opening bell, we had the breakout for the calls, and now the puts are coming down there, and make your order, and this is how to square off at the low here. I was $4.80. I gave the price out before the opening bell. You have to make an adjustment. You take your gain on this side of the market. When this thing doesn't pull back anymore, you take your profits and you're out here at $6. You're just out. 620 is printed, and you take the move off of the bottom and you sell that side of the market. Because, once again, as I will say, in this live trade, everything is very strong still. You're at 73. You're not below 65. You're at 1.03. You got to go below 1.00, and this goes down in value. Then this candle goes down in value. It's a 30-minute opening bell, how to square into the wholesale side of when the stock hit resistance. The 710 put hit 490 and it was tradable for a dollar profit. The call side, as I've shown, has peaked in value. When the calls pull back, when we get the intraday pullback, we'll buy these calls again at the wholesale price level. They made 940 on the high here. And we know how to get the next entry on these calls. We're not paying retail. Yes, they gapped them up almost a dollar in value with the range of 480. And we're going to try to buy these here at 520 on a $710 call. And that's based on this one pulling back as it is. So when Google pulls back, then we get to make another transaction with this pullback here. We get to make a transaction here with the $710 call. And a bid for that right now is going to be $5.20 live here now. And selling out of the put is the right thing to do, yes. And taking the profit share on that exchange. Once again, this is about a 5-minute trade. Listen, call side, put side, how they ran it up to the top on the opening bell. That's $10.80 range. 120 highs in less than 30 minutes. And you had 177 highs, and you have the same similarity over here. We are shorting the farm now. We told people in pre-market that this stock was below 497, was about 497, and that they would try to walk it up in price volatility, but every time they do at resistance, it must be sold short, and that's the kind of result you'll get. Once again, as you can see here, the puts are putting in their bottom by 100 pennies, 490. That's wholesale, 490. If you have 10 contracts, it's 4,900. If you had 10 contracts on Friday, it was $12,000. You would have lost a whole bunch of value. This is the lesson earned. A lesson earned is a lesson well learned. And when we didn't break the teeny line. We didn't get below these diamonds, and he's bid popping it up here to this top diamond. And all of this is a 30-some-odd minute trade as a market maker. Coming out of this side of the market, you got a transaction. Wholesale prices were given out at 480 before the opening bell. And the thing about it is, it's all about minimizing capital risk within support and resistance using calls and puts, whether they're calls on Apple, puts, it doesn't matter, indexes, anything. And then taking the gain. Once again, back to this Google trade is you got a diamond. He tests that diamond right here. And all of this is live MMTs. You can see that lower descending value. Now, I said if you get below 65, you'll break these lows here. But you're not below 65. You're at 1 delta. Now you're at 103. And as long as he's at 1 delta, he's going to hold that diamond support. When this goes down, price does not lag. It goes immediately. Standard technical analysis does lag. This does not.